All right, so I know there's great frustration out there with PayPal stock. I mean, it just doesn't matter what they do. It's not going anywhere but down, it seems. But is that actually true? I mean, is it a dead stock and a complete value trap? Well, there are actually 4 things that tell me it's over for PayPal stock, but it's over in a good way. So don't worry, it'll make sense. I'll get that to you, and I'll give you my updated plan for PayPal stock moving forward. Just make sure you like the video if you like getting the truth without the hype. All right, so number 1, PayPal issuing debt. So PayPal had issued some notes that are to the tune of about $1.25 billion. So basically issuing debt in exchange for that cash coming in. Now there was lots of angst over this, especially in my group whenever it first came out there, but it's not a big thing, guys. You got to remember they have more than $5 billion worth of free cash flow coming in this year. They don't need it to pay the bills. They don't need it to pay out a dividend. They don't need it to do or operate the business itself. So it's not needed for any of the reasons why we think of whenever we think of, companies issuing debt. It's not for any of those reasons that you think. And there's only 3 reasons that I could come up with that this could possibly be for. They didn't tell us what it was for yet, but they did. There is kind of 3 possibilities that it could be for. The first would be an acquisition of some sort, which, there's nothing out there that says they're looking to acquire anything, but you absolutely could do that. And the point becomes, well, why would you issue debt in order to acquire somebody? You got plenty of cash, just go buy them. And I agree with that completely. But the reason why you would use debt to make that acquisition is because you feel with that acquisition, the payoff, basically the return on that investment or on that acquisition bringing in, is far greater than the interest rate you're going to pay on that money. And you can use your cash for other things instead, to basically transform the business and all the other things that they're trying to do. So that way, just kind of think of it like a real estate investor or somebody like that. Hey, you're not going to go out there and use all your cash to buy up the next real estate asset, a great real estate asset you think is going to return you great in the future. You're going to go ahead and leverage that money and obviously leverage out accordingly in order to have that investment come in and provide a much higher yield than it would have if you just would have paid cash for the asset. Now, this one is the least likely of the group. I agree there, but you also got to remember Alex's track record. At his previous job, he was huge in a lot of massive acquisitions that paid massive gains for the company he was with. So he has experience doing exactly that, not taking on a trash, acquisition that ends up killing the company in the end, but actually huge net positive acquisitions he has been a part of in the past. That's kind of how he made his name, and that's kind of what got him in the door here at PayPal. So that right there is kind of what could be a possibility, although I think it's the least likely of the group for now. Now, what's most likely possible is they issued this debt in order to use that cash in order to roll over a debt that comes due this year. I can't remember exactly when it's due this year, but I know they have a large note coming due this year, so they could be using a lot of that money or all that money to basically roll over that debt, which again is a smart thing to do because you're planning on utilizing and strategizing to utilize your cash in a different manner than we were thinking before. And you don't want to use that just to pay off a debt there per se, when you can just roll it forward and kind of move on and continue to use that cash for higher yielding, propositions and projects and things of that nature there. So that's, probably what I would call the most likely of the 3. But the third one is actually the most intriguing, and it's also the next point. So number 2 would be share buybacks. Now, this to me is one of the strongest bull points for PayPal, even if they choose not to use that debt in order to do additional share buybacks. If they choose to use that debt to actually, or use that debt to actually pay off the prior debt and aren't going to use this for share buybacks, that's okay too. That to me is the biggest bullish point here in regards to PayPal stock. Now, obviously, if they were going to use that debt in order to buy back more shares, well, with the share price being so low, that is where I would much rather, have them use debt in order to buy back those shares. Because remember, it's about us as investors and long-term money, us getting the best use of our capital there. And if indeed the return to us as investors with those share buybacks, obviously if the price was sky high at, $150, $250 or so, it wouldn't be the right move to use that debt in order to buy back shares. But at these depressed prices, if we feel like there's a better yield coming in the future for us as shareholders, being able to take more shares out of the float right now is a very prudent move. And it's actually a very common move as well. Many big tech firms do this all the time. The biggest of the big, the mega caps, and a lot of smaller caps, tech firms do the exact same thing. And Wall Street likes it as well because it's an effective use of debt in the first place. You're not using it to pay the bills. You're not doing like what a lot of legacy companies do. Think legacy auto companies like that actually pay debt, or they actually issue out bonds in order to pay out their dividend, because they don't have enough cash flow coming in to pay the dividend. So it's the only way they can pay their dividend and keep it up is to actually take out debt in order to do that. That right there, if that was what the scenario PayPal was in, that would be incredibly concerning and a dumb move. But they're not in that. They don't need the cash in order to pay the bills or do anything else, or even to do the share buybacks. They don't need the cash for any of those things. They're just choosing to do it because of an effective use of cheap debt that's out there right now. And I understand it's not as cheap as it was 2 years ago, 3 years ago, but historically, it is very cheap debt, especially when your stock is beaten down. Having plenty of cash flow like PayPal has, but then choosing to use debt in order to further buy back shares would not bother me one single bit at all. Either way, the float is coming down rapidly and it will continue to accelerate and happen if they choose to use the debt that way. But even if they don't, the float is coming down, which is good news for us as shareholders, especially if they're able to increase that EPS. Boy, you're really going to see that valuation flip pretty quick whenever that happens. So number 3 is Analyst. All right, so I know I tell you guys all the time, take Analysts with a grain of salt. I don't pay a lot of attention to them outside of the fact they can kind of tell me where momentum is in the stock market right now or where momentum is with a particular stock. That's pretty much the only thing that they can kind of tell you with that. Otherwise, it's not really worth looking at. But I will say that right now, PayPal, the bearish number on PayPal is $60, and we're pretty darn close to that number. Obviously, the mid being 72 and the upper range being up around $88 so almost $90. So we are in the almost to the lower part of that pay band for the bearish people out there. You also have, I think it's 11 buys, 15 holds, and no sells right now from analysts that cover PayPal. So in regards to the analyst, we're not really in one of those stages to where things are looking worse or they're feeling as though the momentum is going to get worse. We're kind of down at the bottom of that band per se, with everybody saying either buy or just continue to hold the stock there. So again, take it with a grain of salt, but it is another data point that I can look at and at least say what sentiment is on Wall Street in regards to this stock. I can also say Kathy Wood has been loading the boat with PayPal last week. So I don't know, you can take that as a good or bad. She's not been very good the past couple of years. But I mean, hey, it's another sign, depending upon how you want to take it, that at least folks are willing to take a risk there with PayPal per se, which was not the case a year ago. Again, take it with a grain of salt. Her track record has been terrible, but we are seeing more institutional buyers come into PayPal as well. It's not just her. We are seeing others as well coming in over the past quarter or so, and we'll see how it kind of flows out this quarter after the last earnings, whenever those next releases are made public to us as it pertains to PayPal stock. And number 4, valuation. You guys know, I tell you, valuation is the most important thing here. That's what kind of clued me into a lot of the stocks that I've had that have done great. And obviously this one hasn't done nearly as great. Right now it's trading at a forward PE of 14. Yeah, that's pretty stinking low, guys. Now, it's not meta low whenever it got sub $10. That was just one of the dumbest things I've ever seen in the stock market there. But just kind of for reference here, let me give you guys a few other stocks and kind of what the forward PE is for their stocks. And you tell me, is there more growth in PayPal, or is there more growth in a stock like Coca-Cola that's trading at a forward PE of 22? Or Walmart, which is trading at a forward PE of 27. I'm sorry, I think PayPal is going to grow significantly faster than either one of those two stocks over the next couple of years. Heck, even Block, that's been beaten down and is kind of in the same space, is trading at a 19. So it's trading. Now, you can argue that Block may very well have more runway, more growth potential than PayPal has. I could see that. I do think that for me, one of the reasons why I'm not invested in Block is because of the significant and the kind of reliance on cryptocurrency and things of that nature. I'm not going to get into a whole discussion here about cryptocurrency, but for me, I'd rather stick with something a little more solid, a little more stable. And that's why I lean more towards a PayPal or a SoFi versus a Block, but it's trading even cheaper than Block is right now, despite the fact that essentially crypto has been on a nice run this year so far. So when I look at it by any metric, by any standard, it is trading incredibly cheap. And I know that only happens for so long in the stock market. Now, yes, it can happen for a lot longer than we want. It happened for more than a year and a half with Apple during one of the greatest bull runs of all time. So if it can happen during that time frame, why is it unreasonable for PayPal to experience something very similar during what is not considered one of the greatest bull runs of all time so far? So, I mean, for me, that is the final piece right there that keeps me invested in PayPal, knowing eventually valuation is going to matter in the end, and we're going to see some movement in PayPal stock, especially if they're able to increase that EPS number. So what is my plan for PayPal stock? All right, guys, I got to be upfront and honest with you. Whenever I buy PayPal in my group, periodically, I always post, I hate the stock because I don't need any more of the stock. I don't necessarily want to buy any more of the stock. I want the stock to move just as much as you guys. So when I post a buy alert, I always follow it up with some sort of a message like, I hate this stock, in really bold letters, because it just drives me bonkers sometimes whenever I'm looking at it. But I will continue to add shares at these depressed levels when I have excess cash that I need to basically deploy in the market there. And when those times happen, and this is basically, I'm looking at valuation, I'm looking at everything else, I go ahead and I deploy capital where the best use of my capital is at that time, because I understand in the long run, and I understand it feels like a long time so far, but in the long run, I'm talking 5-10 years from now, share count is what matters in the end. And having a higher share count is what makes the difference between having a lot of money or a little bit of money. And what I mean by that is in our group, we had somebody discussing, they had a friend that had NVIDIA in their portfolio. And they were, like, hey, look at my gains in NVIDIA. And then, by the way, they owned it at like $35 or something crazy cheap. So obviously they're sitting on massive gains. But the problem was they didn't buy hardly any shares for the same exact reasons everybody hesitates to, or why people worry about share count. Knew it was a great company, very, very bullish on the company, thinks it's great all the way around, but didn't add shares because they didn't want to average up, didn't buy as many as they thought at the time because of all the reasons we always, don't buy enough shares, and did not understand the concept of share count is what matters in the end, because a great company is going to run and run and run on you and make you a lot of money. And the only thing that you're going to look back and say is, I wish I would have bought more. I've been in that spot many times before, so I know from experience, it's not a spot you want to be in, especially when you're looking at something like an NVIDIA that's had an incredible run and you had shares at 35 or an opportunity to buy back then, and you didn't buy more shares. So I've been there, done that, understand that completely. When you see something at a cheap valuation, you load up on as many shares as you can, because over the long run, share count is what matters. And that's exactly what you learn in my group, which you can learn through 5 courses, through the free coaching that we have, through our best 6, 7, and 8-figure Discord members helping you out, create all that, create a plan to work through all the different concepts involved in investing. Hey, maybe you just want to be a part of our $250 portfolio challenge and see, am I adding PayPal to that portfolio that I'm starting from scratch and building out to a 6-figure and beyond portfolio? Would PayPal be one of those stocks? You can do that too. Just make sure you check out the pinned comment, see everything that's included in a membership at both tiers. I have 2 different tiers for you there, and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.